Righto, buddy miners. Another little bloody pre-jobby while we're at Diggers, having an absolute belter. We're technically at Diggers and we're technically here right now for you with like two places at once. It's like
magic.
Quantum mechanics.
You know who else can be at two places at once?
Who's that, Jodo?
Axis Mining Technology.
How does that work?
The way that works is, Matty.
Axis. Think of an axis. The globe, mate. It's day and it's night somewhere at the same time.
Yeah.
Think about a team that is motivated to serve every single one of their customers across the state, across the country, across the world.
They're probably at Diggers and also on the phone being a trusted advisor in drill hole survey instrumentation. Technically two places at once. We got there.
We got there.
We have a little special today and we've nothing. Everything is always better with an injection of allergy-C. Like that is just you.
The allergy-C injection.
Oh, you are just the life Panadol.
The life Panadol.
What do we got today, legend?
So we put it out to the money miners overnight to ask us pretty much any question they like about companies, commodities, the team. So I've collated the top, I think, dozen of those questions for the team. So we'll get right into it. And thanks to everyone for sending and commenting and all of that as well. Bloody loved it.
Should we put a disclaimer up first in terms of we know you want to know what we think's going to go up and down and what we hold and what's the biggest holding, but we're just not.
Sorry,
we're not giving stock tips and we're not telling you what all our money's in.
Yeah. Go call your broker if you want to lose money. Don't come to us.
Exactly.
Come see us at the Palace, mate. It's 2 a.m. I might give you a couple.
Love it.
Right.
So, all right, we're going to kick off with the first question. This is from at SidC17 on Twitter. If you were at the helm of Regis, how would you address their growth problem? Would you try to salvage McPhillamys, pursue M&A, or consider another approach?
Are you targeting a person with each question, or are you just going?
No,
open?
I'll put it out to the table.
Oh God, you'd have to, which is what they're doing. Get that bloody drill bit spinning at Duketon, because where there is gold, there is hopefully more gold, and it's a lot easier to scale that than going down the McPhillamys route, which I think they are doing.
Yeah,
so tick there.
On the McPhillamys part, you'd probably want to cull as much spending as possible, because I think that is a long ways down the track, and to sort of preserve cash in the meantime and direct it elsewhere. And Trav, you've been sort of outspoken on the M&A side of things.
It's interesting. We've done that kind of like exercise, which would have been, published by now, Ali. And the takeaway when you look at like all of the undeveloped gold projects in Australia, it's not like there's actually something better than McPhillamys out there. It's kind of as good as it gets, which is a really strange thing to like reflect on. Granted that there is no better undeveloped, advanced kind of gold project for them to develop other than McPhillamys. I think it's probably going to be worth them holding for option value, but kind of orienting their focus elsewhere from like a growth perspective. I do think the status quo isn't an option for them. I think they need to do something, and the only way that they can actually do something is M&A. I think like they should try and be a bit creative. Like I look at their market cap now, and it's like 1.27 billion. I just looked this morning, and keep in mind they paid 900 million for their 30% of Tropicana. Isn't that that's kind of crazy, right? Like, so that tells you what like this, obviously everyone thinks they overpay for Trop and stuff, but it kind of shows you what the see-through value of the, the rest of the portfolio might be. Gold price has gone up and these guys are down 25% year to date.
And the hedge is gone now.
Hedge is gone, yeah. But they're staring down the barrel of more expensive operations, depleting reserves, and a lot of capital required to kind of maintain the production. They've kept kind of guidance sort of pretty elevated. And
the bullet payment for the Trop debt as well. That's still there.
I think there's a couple of deal options for them. One is that Ravenswood Gold's going to come to market pretty soon, probably probably next month sometime.
Oh, out of
Out of EMR.
EMR.
That's going to be like a 250,000 ounce producer per annum. They could direct their cash that way. Let's see what that looks like. That might be an option. Another thing they could do is be a bit thoughtful with their own so they have 30% of Trop with Anglo Gold Ashanti. What if they could swap that 30% for Sunrise Dam? Something a bit funky like that. Give them just something a bit fresher, a bit funky, and a bit more thoughtful to think about going forward. Otherwise, if they don't do that, I think the inevitable outcome for them is they end up just getting acquired. Like they'll become, it'll be a low premium sort of thing, and they'll just scale has been the theme with a lot of these sort of mid-tier goldies.
Why would you go for Sunrise Dam? But pretty low grade, big operation, very historical. What's the benefit?
I look, if Regis said we can operate this leaner than Anglo's a big global, we can operate it leaner. We think they've missed a bunch of stuff because they're not even from here.
Been there a long time, but
exactly, totally, yeah. They know their joint venture partner better than anyone at Trop. So I don't know. I just think a new lease on life, different kind of asset could be interesting too.
The view on McPhillamys and the research looking at other exploration and development projects shouldn't be really surprising, should it? Good projects get built. So I don't think it's a massive surprise. Some get held up for various reasons, but at the end of the day, good projects tend to get developed by the companies that have got them. So
or bought.
Yeah, exactly. Yeah. So not massively surprising on that part. And doing a deal when your back is against the wall can lead to not the best outcomes. So we'll sort of see.
Yeah, I think the Gold Road one, it's like, you trim out the bloody corporate costs of Gold Road. Like, don't know if you'd want to go down the De Grey route's a risky one, getting exposure to that. Don't know. I think maybe the magnetic thing out that way, but because it is close to Trop and Sunrise, that might actually complement what they've got out at Tropicana. But it's not, as I said, again, not a freaking knockout sort of thing. But it is growth, and it's got some sort of regional synergy with close to where they are. So, but yeah, don't know.
Cool. Keeping with the gold theme, so we've got 2 questions. The first one's from Top End Rooster on Twitter.
Oh, he sounds like my type of guy. I assume it's a guy.
So he says, will Bellevue ever declare what their all-in sustaining is? Do you reckon they will be a takeover target at this price after their fuck up of a deny capital raising? I'd love it if Capricorn or Emerald made a play. And then there was a further question from, I think it was Risket for the Biscuit, also on Twitter. Is the recent Bellevue 5-year growth plan overrated or underrated from a long-term holder perspective, taking into account a higher gold price can help paper over the cracks?
That's a loaded question, Natty, slung right at you.
Yeah, I think this is coming straight at me. Well, are they let's break it up. Are they a takeover target? Well, I wouldn't not be surprised if it'd be interesting to see what happens. We were discussing before with this SPP, if it gets, because I can't see people partaking at $1.55 when it's trading in the $1.30, $1.40. So if that's going to be revised and the price is going to go down, so if they're going to actually, 25 million of that they're going to get, are they a takeover target? Well, I think based on where the mine is at, from what I can surmise, and how they've now got this growth plan to take the focus off the pressure of quarter, because they've paid a bit of debt. I wouldn't be surprised if there's more production pain to come, because if the development is not far enough ahead and the infrastructure is not in place, and you've got a fixed amount of power, as I said, the only way to get yourself back ahead is slow production, to get the development ahead and get the mine actually running smooth. So I'd anticipate some, unless they get a big grade uplift and everything, I'd anticipate a couple of tough quarters coming up on actually the ounce front, which is what they should be doing to get the mine properly set up and so it actually flows. Get the capital ahead, which takes longer than other mines because the ground is hard. That is just how it is. So
there's a bit
I don't
to
think
that.
there'll be a takeover target until there's a bit more pain.
I got some word on the decline on this. So they asked, I'd love to say, they said, I'd love to see CMM or EMR. But I don't think either of those are the right companies to be thinking of. Both of those are, open pit specialists. The right kind of question to ask is, are they takeover target to Northern Star now? Because word on the decline, like Northern Star were pretty interested in Bellevue kind of before they built it themselves, and then they took the view that it was always pretty expensive, and then they sort of took the view, we'll let them fuck it up first before we come. And like, would it be a bloody friendly deal? Don't know. I think there's some tensions there, some personalities that might not get along anymore. But I wouldn't rule out the possibility of Northern Star going hostile. Like, and I know that's like a strange call to make, but I reckon they've actually considered it before, and I wouldn't be surprised if they considered it again.
Yeah.
But it sounds like what Maddie's saying, if they were going to do that, they'd let the pain crunch continue a little bit more and then probably come in then.
Yeah, I wouldn't be surprised if something pops up, as I said before, with Spartan and Remelius or something like that. If they can go through, if the value keeps sort of going down the way it is, if that sort of becomes a bit more viable, it'd nearly be a bit different on the EV with the debt and everything. But if they keep going down, they're going to be pretty much equal to Spartan. So whether that's right or wrong. A lot more sunk capital and everything, and Spartan's very early stage, but yeah, don't know if something's going to happen there. I like the Northern Star idea, but I just don't know if. I think it's they'd have to get it pretty cheap for them to offset the operational risk and the difficulty that it appears, because it's like it's similar to a Jundee in terms of like it's a bit rabbit warren-y. Like there's a bit over there, bit over there, bit over there. Jundee was obviously a lot better. All the infrastructure and stuff was more set up and in place when they took that over, whereas this is still in the setup phase. So I think they'll wait for them to sink more capital into it before they have a look, because if they sink more capital and they don't keep the ounces coming they might be at raise risk again, I think. So it's a bit of a balance. Was that every question in that? There was other ones.
Yes, they will report all-in sustaining cost in a matter of time. I think that's one of the last
Oh,
ones.
the 5-year growth plan, overrated or underrated from a long-term holder perspective?
I don't know if they're going to. I think it's just going to be difficult to achieve. To get that amount of dirt out with and keep the mine ahead, unless they really get the capital development right ahead. I think it's just going to be difficult to get that amount of dirt out. What was it? 1.4 or 1.6 million tonne per annum they were upgrading to?
Up to 1.6.
Up to 1.6. Of all underground hard ore, unless they're getting got some other pits they can go to or something to make it a bit easier, but like getting that and a lot of the lower grade stuff, like where if they open some of like that cut and fill, like the sort of flat back and shallow dip and stuff, that's pretty hard. That's pretty slow rate of getting that out. So I've just got questions over if they can get that much dirt out of that mine and sustainably keep the cash flow coming in without raising. So yeah, I'd be interested to see once they install the extra solar. I think said the extra 7 meg of solar that was still to be installed, I think, and then whatever upgrades they probably do to the thermal station, if that's going to be, you'd hope enough power for all this to happen. A lot of constraints.
Moving on to uranium. So we've got a question.
It's just rolling for me at the moment. Jesus.
We've got a question from GC number 2. How does the rehab liability actually play out with ERA? Luke Blaze.
Luke Blaze, Dreadnought, yeah.
Legend. He asked, how does the rehab liability actually play out with ERA? My understanding is the bill is in the order of billions. Market cap's at 330 mil today. Does Rio have an obligation to step in, or does it go as far as taxpayers footing the bill?
So correct me if I'm wrong here. That rehab liability is just what they are budgeting effectively?
It's re-estimated, somehow every year. It's
Yeah.
just like the rehab works will be estimated. There'll be a series of cash flows associated with that, and then they'll discount those cash flows, and then that number is what you see for the closure and rehab on the
But
balance
they're
sheet.
making that's
ERA.
their number that they are budgeting, that they're estimating.
Yes. Yep.
Correct.
Which is
And as we discussed the other day, that sort of back-ended a little bit. A lot of rehab work has been done, but that is essentially a number coming out of Rio Tinto because earlier this year,
ERA.
ERA gave all the rehab work to Rio Tinto. So
That was post quarter end, I think.
I thought that was in March.
Oh, okay. Yeah, you could be right. Yeah.
Yeah. So, yeah, it's a number coming from that group. So who knows what it actually looks like. It had been sort of raised to us that there were questions about where the money actually needs to be spent, getting into the specifics of a $2.3 billion bill. I don't think
so saying that some people don't think that much needs to be spent on it to get it done.
That was the implication in the comment. I don't think it ultimately goes to a taxpayer bill because Rio Tinto was there and they socially could not have that be the case.
Yeah. The mechanics of it are entitlements offers will put equity into ERA. Those entitlements offers will come from the shareholders who might choose to exercise their entitlements or not. If they don't, they'll get diluted. And if they get diluted, then it'll be all of Rio's money that goes into it, and Rio will kind of get full control. So it's a tricky situation for the minorities who wouldn't want to be diluted to smithereens and sort of kind of get nothing. They'll want to be taken out by Rio and kind of get a liquidity event.
Yeah. So if they do an entitlement offer now, knowing that it's looking like it's going to be incorporated into the national park, so pretty close to being squashed.
Jabiluka, yeah.
Jabiluka. So if they do the entitlement offer at a discount, then they go over 90%. When they go into compulsory acquisition, do they buy the shares? Do they have to put a price in to buy those shares off the remaining holders, or is it just done at the prevailing market price?
They will have to get paid. It'll be the first time a company on the ASX has ever been taken over via
An entitlement.
So it's a fairly unique, and we sort of saw Zentries essentially post a complaint to the takeovers panel preempting this entitlement offer that the takeovers panel sort of said, hey, it hasn't even come up yet. We can't make a ruling on it just yet.
Yeah.
So it's a fairly unique situation.
But when it's so illiquid the way it is, like, you know, when a company gets to 90%, say they're doing an on-market takeover and they get to 90%, once they get to that point of compulsory acquisition, what price do they buy the shares at?
Mate, I got no
GC,
idea.
I
I got no idea.
The one comment I'd add, I don't know the answer to that, but to the question, I wouldn't put much stock in this being a $330 million company. Next to no shares trade. That is just not a good gauge of what the value of this company is.
Yeah.
Alrighty. We've got a question from Nick. The bear case for uranium, if 95% of spent fuel can be reused in the cycle, why is there concerns of an impending deficit?
Oh, geez, that's one model I'd like Mr. Mike Olkin to walk me through. As you said, it's just like you work backwards from the amount of reactors and everything. Geez. Boy, that's a tough one, isn't it?
Yeah.
I think it goes so much deeper than like how that model works. Like to back calculate like the recycling and everything like that. I'm not sure of how much fuel they get out of the recycled fuel
And what time that takes to get to that point.
Oh, geez, that's a fucking tough one.
New
I better
reactors,
do some Googling.
New reactors still require new uranium, right? And it's kind of even if you include that recycle rate, like if you're if you're basing your thesis off the growth of new reactors, or they're going to require new uranium barrels.
Because isn't the first fuel that goes into a new reactor can't be spent at all, like in terms of the fuel rods?
Oh God, I got no idea.
To my knowledge, like the first bit that goes in has to be brand new enriched uranium. Can't be old stuff.
I think some of the most of the existing reactor stock out there, they're not the latest generation of nuclear reactors, and they don't recycle as much as 95% either, do they?
I think that's a much newer
trend.
Evolution in the process.
Yeah, I don't know the numbers, but I don't know. I suppose you just look at how many are getting built in China, how the recycled is one thing, but how long that fuel actually lasts in there as well, because it lasts fucking long. Last years when they put the rods in.
Yeah.
So whether the recycle rate would keep up when you're actually getting access to it once it's finished, not sure.
We should have a...
Geez, I don't fuck all now. I feel stupid.
We should have a very good uranium interview coming up in the future, so we can...
with old mate.
Old mate. So
old mate.
We can sling that question toward them.
Yeah.
Very good. We've actually got a question from Mondi that got missed last time, so sorry about that, Mondi. We've got it in the list today.
Pressure's on here.
He's asked, and it's actually, to be honest, probably even more relevant now, which mining sectors will most likely benefit via reduced competition for workers from the unfortunate job layoffs in nickel and lithium? And are these workers' skills more readily transferable to, one particular commodity or type of mine than another?
Well, it's a very regional based question, right? It depends where the jobs have been sort of cut, and that's a very sort of WA specific and how transferable the skills are, right? And but by and large, a good amount of them are. If you're an underground operator in nickel, you'd be able to go and work at a underground gold mine in the same state, in the same region. Given WA's predominantly FIFO operations as well, it gives you flexibility across the state. So by sectors, I'd say the other WA operations still working are the winners from this.
I'd be interested to know what's happening in the town of Leinster. So Leinster, the town, is owned by BHP, and I think they live there. I don't think they live there for free, but it was like they could rent cheaply there. The BHP workers and other people that worked for other companies could live in the town as well. So I'd be interested to see what happens now that if BHP will still have an arrangement that people can live there. So mine sites like Agnew, Bellevue, Kathleen Valley, what else is in that area? Pretty much, that whole Leinster region. So whether those companies might benefit, that people will want to keep residential because, they don't have to do FIFO, they can have their family and kids living in the town. So whether those mine sites will actually benefit from that, not sure what the arrangement is.
Yeah, the other, I think, to the regional point too, there's been a lot of these plants going to care and maintenance. And I don't think all of the possibilities of how those that latent infrastructure might be utilised going forward has been completely thought through. Are there some instances where a nickel plant going into care and maintenance could be repurposed as a gold plant for a gold asset that's sort of stranded and lacking a come to market plan? Things like that might be a bit obscure, and you kind of need to overlay the two maps on top of each other to think about. The workforce one's interesting, and because I've never properly worked in the mining industry, I don't feel like I can really comment on that one.
Yeah, good one. And just sort of linking in with that, the lithium theme, do you think lithium will ever have its day in the sun again, or has the world cooled on the EV thematic? That's from Jan Anderson.
One of them, if something can go up that much in some point in time, you would think there is definitely a possibility it could happen again for whatever perfect storm that might present itself. So it's like a never say never, but there's different views for people that hold lithium stocks and people that don't hold lithium stocks. I don't hold lithium stocks. You just look at there's the whole China's playing silly buggers and everything you're still hearing, but then you just weigh it up as a commodity or a bloody chemical. of so many different forms of supply and the abundance of each, like the amount of fucking pegmatites in the world and spodumene that is there and can come online and can be scaled up. Just, yeah, it's just not a bit different to a nickel sulfide, for instance, which is, or a copper, like a high grade copper mine. That's just seems like the barrier to entry to start a numerous lithium mines. Hard rock is probably a bit simpler.
Yeah.
And it's all over the world.
Yeah, but I think that the cycles are totally a factor that will just continue to happen throughout commodity markets and all markets for as long as time. Look at nickel. That had a massive run up in 69, 70, 2007 had a massive run up. A couple of years ago had a massive spike again. Uranium 15 odd years ago, and now it's had a huge run up again. These things are totally normal and they will just continue to happen for a long time to come.
Yeah, I echo that from JD. And I think like when you zoom out, like is the world going to have way more lithium in 10 years' time than it does today? Absolutely. Like way more. We are going to have heaps more batteries. We are going to have heaps more EVs, even if they're, plug-in hybrids. Like there's going to be just a lot more. There's going to be big BESS developments everywhere. So it does have a phenomenal kind of expectations of demand. The growth trajectory of its utilization in society demand is almost better than any other kind of commodity. But the thing we've kind of recalibrated is it's not as fast as we used to think. And also supply can respond a lot faster than we thought too. But I do think just based on its, kind of really, healthy demand outlook that it'll have its time again. I don't think it'll be as fly up looking as the last lithium cycle. I just think, we have to kind of moderate expectations of what, the long-term price might end up being, but it'll have its moment again.
I think the difference next time will be, based on all the effort that went in the last 2-3 years with exploration and projects being curtailed and everything, supply would be able to come on a lot quicker from newer operations and scale-ups because of the work that was done in this cycle. So won't drag on like the last one. Yeah. Because a lot of shit's been discovered.
Absolutely.
And sitting there ready to go, in a way.
All right, changing things up a little bit, can each of you tell us who you would pick as your ultimate resource management team that's currently trading and operating if they had to bat for your life, and why? This is from Black Douglas on Twitter.
Is the question referring to a management team to run a company?
It just says ultimate resource management team. I assume so, yeah.
So you'd have to pick an MD and I don't know. I can't say I know the best CFO out there.
I reckon.
Shout out Tim Manners. He was good. I like Tim Manners.
It is so deposit and project and commodity specific, the question. If I'm having an open cut gold mine in WA, I wouldn't mind Mark Clark and the sort of group that's worked with him at Regis and at Capricorn to do it. If it's a, underground copper mine, there's other people that I'd want to run that. It's very dependent.
I'll choose Friedland because whether it's a good deposit or not, I know you'll make it go up.
Which goes against your whole philosophy. Just contradicted your whole
the world's best promoter.
Who are you liking, Matty, out there at the minute?
Well, I know. I sort of agree with what JD says, but I think a lot about the experience-wise is there is that, but then there's just the way the business operates, and if there doesn't necessarily need to be an MD that is an underground mining or an open pit expert. That's you can get a COO to do that, but having the fundamental philosophy behind the business of actually how it's marketed or not marketed and what the culture's like in the business and what the standards are in the business. I think that's just as important, if not more important, than the actual expertise. If Mark Clark...
I think they're hand in hand.
Yeah. So I think it's a bit from column A, bit from column B. I would... If Mark Clark was going to run an underground gold mine, I reckon he would do just as good of a job as an open pit gold mine because he knows how to run a successful business.
Yeah, you take them over most.
Yeah.
I actually just had a bloody a sort of swap of mine, but yeah, if I would have kind of
So you're not going Friedland
I've,
anymore.
I've got a group I want to say
it's
as well.
management. I just think like you don't get an organization with kind of better broad-based alignment and long-term thinking at the moment than Glencore. That's what I'll say.
There's another group that I've sort of respected over time with their long-term view, and that's the sort of Lundin group, and that's a real,
totally.
That's a real mix, but just the way they think very long-term, and they have long-term assets, so they're able to think that way, but that creates enduring value.
It's like three generations now, and they're thinking about the 3 ahead. Yeah, it's easy to be alongside people like that.
Yeah, there's a book by the Patriarch. It costs like hundreds of dollars because there's only a couple of them printed back in the day, but that'd be a good one.
Yeah.
Jeez, it's like trying to pick a footy fantasy team or something.
It's like, who's the best company secretary you can pick?
Who could be a good half forward? Anyway, back to commodities. So this is from Daniel Gleason. Will BHP sell West Musgrave, or will they bring into production after 12 to 18 months once Nickel West, etc., is fully into care and maintenance and the dust has settled? And I think just more broadly, curious to hear your guys' views on just whether that scenario might work out or whether there's an alternative scenario you think's more likely.
It was nickel cobalt, isn't it, West Musgrave? I'm pretty sure cobalt's the byproduct there.
Copper as well.
Is it?
I know nickel cobalt's Murrin.
You could be
Don't
right.
think West Musgrave is.
It's 2/3 one, 1/3 the other.
Gotcha. It's a fucking long way from anything. It's so far away.
So what was the latest there?
They're stalling. They're tapering everything.
And they're what are they, like 20 or 30% constructed, and things are just on hold now.
I think West Musgrave was only kind of like the benefit of West Musgrave came from the fact that the smelter needed it, and now the smelter's getting the flick off. I just think it's not the most effective use of BHP's capital. I'll probably try to sell everything, like sell all of Nickel West.
Oh, do you
Think
reckon
about what they compare that with in their portfolio. Is that really going to be the one that wins out?
Yeah. Do you think someone's going to do a counter-cyclical bet and try and scoop it all up?
Yeah. Wyloo or something.
Oh, yeah, maybe. Like,
Yeah.
who knows? It is definitely one of the most hated things, but the seen historically with nickel, like the tide can change so quickly. Like, I suppose the last nickel, like this whole nickel thing, it was all on future predictions.
Mm-hmm.
There wasn't like, correct me if I'm wrong, there wasn't a real massive demand at that time. It was all because this whole battery revolution's happening. We're going to, NCM batteries are going to be this dominant long-range battery, and everything changed very quickly. The rise of LFP in Indonesia, but like it didn't actually, it was all in anticipation. Cosmos, for instance.
I think you could broadly say that there was an uptick in NCM, but then that had the sort of wave of LFP becoming more dominant. But nickel is still by far and away used in stainless steel production. And that was the growth in all these models. And that was what was going to be massive by 2030 and so on. But yeah, in the context, it is still far and away used for downstream stainless steel production.
I think it falls off, but I don't think BHP will be in a rush necessarily. Yeah. I think it might fall off post 2027 when BHP kind of calls time on everything, and then they might sell that.
Do you reckon they'd sell it for fuck all, would they? Just to like, do you reckon they're like real, not a deal, like bargainers when they're doing a deal, or do you reckon they'd be easy to do a deal with?
BHP are insane to do a sale process with. They literally have like 60 people on the Zoom calls and running a work stream for a sale process. Like it's stupid.
To maximise the value, or
just because there's just too many layers of middle management and everyone needs to justify their role.
Yeah.
That's what I think.
Jeez.
And tick all the dots and everything's in order. Yeah, it's a strange organisation.
Yeah.
BD team is like way too big in my opinion.
Well, I think the most effective BD team I've seen, very opposite contrast to BHP, is just having Drew Harvey at K-Drill. Like, that's like BHP need to take a leaf out of that book. Like, look at they're just flying. Drew Harvey.
Can you imagine how much better
Druba.
BHP would do if they hired Druba?
Imagine how many people they'll be able to get rid of.
Synergies.
Hey, but it'd get done.
Yeah. Yeah.
Just a handshake and get on with
Just
it.
like, mate, there's none of these Zoom calls. He just pops in, has a pint,
Yeah.
bloody,
It's like-
have a yarn.
It's like getting K-Drill to your site to punch in a few holes. Just a handshake and get on with it.
Yeah, I think,
Get on with the job.
I don't know, maybe BHP need to change their logo colour to red and white like K-Drill. Take a leaf out of the bloody, the king of the goldfields for exploration drilling.
If you want hassle-free, reliable drilling, just call K-Drill.
Call K-Drill. Druba's email is in the show notes.
And no more
Hit
BS Zooms.
Hit him up. No more Zooms in your life. Just get K-Drill punching your holes in. Yeah. Anyway.
Well
That's a
said,
good
mate.
segue,
Well
mate.
said.
Moving on to copper. This is from Sentinel on Twitter. So much conflicting info out there. Copper inventory's up, yet BHP wants more copper. Uranium price down, but supply deficit still forecast. Lithium price down, demand and supply strong. Gold equities are lagging behind gold price. What's your take, and what's the accurate state of play? Perhaps focusing on the copper angle a bit.
Well, the first thing that comes to mind with the first two comments there is that they're viewed on a very different time frame. The inventories rising is a very short-term feature of the market, and BHP buying an asset is,
More long term.
a much more longer-term view on the market. So, yeah, I mean, on the short-term side of things in copper, we saw a massive spike up. A lot of that was sort of inspired by fundamentals to start with, and then carried away by financial players in the markets. And that is why you see whatever it was, a 30-odd% jump up in the space of a couple of months and then pulling right back down. And there's all the intricacies that we've kind of spoken about in the market, with mines being constrained with concentrate output, and then the smelters and refiners being short of products, so they can drop their charges and so on. I think that feature stays for a little while longer from what we've spoken with, people in the market. Treatment charges will probably stay low for the short to medium term. It's hard to get insight, but you can see that a lot of new smelters are coming online, so they're going to be there, and they need supply. Yeah, that's what I have to say on copper.
Yeah, copper is your domain, JD.
I mean, the other interesting angle to it is we saw the third Chinese plenum just a couple weeks ago, and people were anticipating a bit more support for industries across China. This is one of the reasons why iron ore fell away a bit, and I think on the day copper dropped off another 10 cents, from whatever, $4.40 down below $4.30, I think it was, just on the fact that people were baking in a bit of stimulus for the various users from property through to smelters that eat up all the copper there. So there's still a lot of concerns in and around China, and that remains the case. And obviously they're a big end user.
JD, do you think there's going to be a $6 a pound spike ever? Like, do you think copper will ever have a spike like a nickel or anything, or it's just too big?
It will 100% be over $6 a pound sooner or later. Like, it's going to get there.
Is it going to be just a gradual? Oh, who fucking knows?
Commodities don't tend to just be
Smooth.
gradual. Like, they get there through, jumps and, troughs and stuff. That's how they kind of grind their way up. But there's, like, how we've spoken about commodity markets being vulnerable to shocks and stuff, leads to jumps and these sorts of things. So, but I can absolutely see. I mean, you can see the cost inflation throughout the industry is one of the biggest factors that is going to lead to copper being over $6 in just a matter of time. Who knows what the actual profits of all the miners are by that point, though.
Yeah.
And a follow-on from that, from Risk It for the Biscuit, do you think there'll be some strategic M&A from Glencore Rio in the Mount Isa or in just broader sort of northern Queensland region?
I don't know about Glencore. I think like every indication is that they're tapering back. Their only kind of like, you know, activity in the M&A set, like, you know, is they're worried about feed for their infrastructure there. But they're publicly saying they're not a seller. But I do think they could be a seller. I actually think the interesting proposition is Metals Acquisition Corp. They bought their last asset from Glencore, right? Like their only asset from Glencore. And Glencore's a shareholder still. Like, does it just make sense for Glencore to, you know, to sell more of their own sort of Mount Isa, you know, be the mine, infrastructure, and everything to MAC? That's a proposition.
I just don't think the assets just aren't. That North Queensland area just doesn't seem like it belongs in a big name.
Back in the day, I wouldn't underestimate the amount of sort of politicking in and around this. Glencore have, you know, decent other mines that aren't copper mines in the area. They don't want to piss off the Queensland government. Like, to an extent, Mount Isa relies on the employment that comes through Glencore there, and they don't want to upset the sort of status quo and their standing in the community. That's very important in this day and age, you know.
And there's heaps of acid that comes out of that smelter that's like crucial to so much of the agricultural industry and everything like that. So there's a whole bloody a lot of interdependence from a lot of the infrastructure there. I heard rumours a while back that Glencore were bloody putting holes into the golf course and they're going to just turn, you know, Mount Isa into a big bloody super pit. Because
it sort of sits underneath.
Yeah, there's a huge resource under the town there that you can't mine yet, but yeah, I mean, if you turn it into a super pit, you might be able to. So,
if it's at the golf course, maybe Agnico Eagle might go into copper.
Why's that?
It's under a golf course, an eagle.
Oh,
Jesus Christ!
I'm not putting that North Queensland thing. I'm not putting. I would historical connections and everything. I'm not ruling out. Something to do with AIC and develop.
Yeah.
Given a bit of history.
Given that was Mr. Beeman was the general manager at Eloise. Might be a bit of historical stuff there, but hey, developer going to want to grow as well. They're not going to just be Woodlawn.
They got 3 growth projects.
What are you trying to say about Pioneer Dome?
Yes.
Sulphur Springs, mate. Come on.
I wouldn't. I wouldn't be surprised.
ARC will be active. It's like that's kind of the whole messaging to them, the market for them is stepping stone M&A, and I think like in time that'll play out. I don't know if they look regionally or externally, but it's not like the synergies are super straightforward or in and around that area either. There's limitations to realizing a lot of those synergies. There's, you know, whole roads that aren't built and things like that make it tougher than you would initially think.
I think it all needs to be done. Like, it either nothing happens or you need to do it all. Like, because there's all little bits here, little bits there. Like, it's
a big overhaul.
You need a big. I don't know how the metallurgy works with mixing a shitload of different copper deposits together, how that works with floating it all out, if there's any, if it's like gold, if it's all a bit different. Not sure. Nathan Stoidis, let me know.
Alrighty, each of you, who is on your bucket list to have on the show as an interview guest?
Whoa. Chris Ellison. Just want to fire him up. I reckon he'd be good.
Trev?
That's a good one.
I just love his, he's run MinRes like it was a private company in terms of he's retained his equity. He hasn't just dumped a fucking heap of shares when the MinRes was at $90. Like, he's, you know, run it like it's his business. I like that shit.
100%. That'd be a fascinating discussion.
Yeah.
I've got a list of 5 in my head.
Why?
Rattle them off. I'm keen to hear.
In Gina would be quality, similar reasons. Just be funny. Don't know where it would go. In the billionaire category, go Friedland as well. Just think it'd be quality. And then in the fund manager territory, there's a couple. We've talked about Fred Willard at Stam. That'd be an interesting chat, I reckon. And the L1 Capital people. Yeah.
They're on the list.
And I reckon Tim Elliott at Regal would be a wicked yarn too.
Oh, and I'll have to chuck in the delicacy. Mr. Andrew Quayle. But it'll never happen.
Or if we're in the billionaire category, a completely out there one on the investor front would be Stan Druckenmiller. The way he looks at macro is just outrageous.
That's a bloody.
Where's he bloody? I don't know.
He ran the Quantum Fund. He ran Soros's money for a long time, and now he runs his own money. Duquesne. He's maybe the best macro investor of all time.
Yeah.
Brett on Twitter asks, when are you lads planning on going hostile and taking over an ASX lifestyle shitco?
Geez, it'd be a bit of fun.
That was my idea. How good would it be to bloody get a shell, go in, get K-Drill in there for a bit of equity, get Stoidus in there for a bit of equity. That's your metallurgy covered. Get every part of that whole process in for equity. Everyone works for equity, and every single dollar goes into the ground. Hey, and we'll even won't even pay ourselves anything. Just actually see if you could actually run an exploration company with absolutely no overhead expense, all for equity, and see if it gets re-rated. Because it's all going into the ground. Have to get some good ground.
How will you get the kids to private school, mate?
Oh, no. Mate, no. All our kids are going to public schools.
Yeah. Well, it sounds like it's a matter of time then.
Oh, I love it. Actually, someone
and
else.
the announcements, just fucking dot points.
Dot
dot points. No flash shit. Just a BHP style announcement. Just and it'd be look, we drilled here. It was turned out to be fucking shit. We're reevaluating our options. Just no fluffy crap. Just drilled here, it didn't work.
What about the
honesty?
Not many adjectives.
And it's look, we're running out of money. We're probably going to raise soon.
What about the conference circuit?
No conferences. Absolutely no conferences.
I love it.
Chuck a bloody selfie video up and just be anyone wants to ring me, just give us a buzz. Fuck it. I'm MD.
The business plan is already written
I'm
itself.
MD.
We have to reserve.
JD, you'd be the CFO.
Amongst these here, I think there'd be stiff competition.
We'll have to reserve the MOM ticker.
I would watch the wallet
though. Oh, I love that. Actually, someone also asked whether Shane Warne was the audio for the T's and C's at the end of the episode as well.
I wish. Oh,
that
God,
might be a
that
bit
would have
hard.
been a good interview back in the
that
day.
is your Maddie Michael to the right of me.
I've sped you up about 7% there. Maybe that gives you the Shane Warne kind of tone.
What a legend. Go Australia.
What's the best pub in Perth for my U company due diligence trip in a few months? Good prep is essential. That's from Steve Pearce on Twitter. Where's each of your favourite pubs in Perth?
It'd have to be probably Mayfair, just because that's the first place I ever met Derek Hurd from DSI. That was it. To actually sit down. I know, to sit down and have a beer with the DSI team and finally be face to face with the greatest ground support supplier in the world.
What an honour.
And that has probably catapulted Mayfair to be the top pub in the world.
If they did one of those stamps like the coffee shop, you'd be getting free beers every other week.
Yeah, mate. If you want your pub to go bloody through the roof and take over bloody Australia, host a DSI event and just get them in the building because the punters will come. Go DSI.
He's got some real character to him, Derek.
He's going to run next gen soon.
An understated local hero. I'd trust him to put the fire out of my bedroom.
Oh, I know. That's the ad sorted for today. Beautiful. Anyway, my favourite pub.
That segue was so good, I didn't even know it was an ad.
Top quality today.
My favourite pub in Perth would be... Actually, I went to if you want this would be good for State of Origin, the bloody Varsity pub in Freo or Vic Park. Got a massive fucking big screen. That was bloody,
Love
yeah, the Camfield's good. That's got a big screen out the back. Anywhere with Dingo at it too.
That Varsity
Those
one,
joints.
you can't look in a direction without seeing a TV.
Yeah, I like that. It
You
just
don't have to
needs
strain your neck.
it just needs pokies and Keno. The best pub in the world is the Clavelli Beach Hotel in Sydney. That is God's country.
I went to seasonal brewing in Maylands a couple times this year, and big fan. Really like it. It's got it's just cool feel to it. You know, you can bring your dog inside. It was good. Monty comes with me.
Yeah, different pub styles.
No Keno, no
just like
screens.
sport.
I can bring my dog.
I just want sport, gambling, and piss.
It's like the food was elite. It wasn't quite like it was like it's just great. Good winter pub. Had a stout. Felt fucking great.
What's yours, JD? Belgian beer cafe, something with
I've spent a bit of time in Freo this year actually, so there's a bit of a routine between 3 or 4 of them. But I'd go to the National to sit on the rooftop and sink a few there.
Yeah.
Oh, very good. And this is the last question.
Actually, I'll say I've got a new one in 6011.
Oh.
The Albion Hotel. The Albion Hotel in 6011.
Your new postcode, mate.
Yeah, you've been welcomed into the community.
Welcomed by the locals or the hopefuls last night.
That's awesome. I've got one last question for each of you from me.
Oh,
Yes, Ali GC's got a question. So we're about halfway through the year. What's one of the coolest things you've learnt this year, and what's something you'd love to learn more about over the course of the rest of the year? Start with you, JD.
oh thank fuck for
Jeez,
that.
it put me on the spot. One of the coolest things I've learnt this year.
Or something you never knew much about before you've learnt.
One of the most fascinating things I've learned is it's actually more on the financial side of things, and it's just learning more. We've spoken about this quite a bit off air, not really so much on air, but the way the funds management industry is set up across Australia and America and everywhere, and the sort of productization of all the various funds that groups have, and how they have benchmarks, parameters, mandates, and everything. It's something I knew a bit about, and there's been a sort of good evolution in amongst going to Sydney and all that, and speaking with a lot more fund managers this year in just how that industry really works. I found that pretty fascinating.
Does it make you cynical?
Definitely. And one of the things, I think I've said this one in the past around the turn of the year, but was geology. Sort of reading more and more about it, and I feel like I know less and less. But I've actually enjoyed having a few geos on the show, and probably say the same for Met as well. But that is something I'm very eager and actually pretty fascinated by to learn more about.
You, Matthew?
What I've learnt, this is a bit psychological, this one. What I've learnt about the efforts that people will go to shut me up when I'm fucking right, and how it comes to fruition in the end, just to preserve their company's interests.
There's no interest like self-interest, Matty.
Incentives are a powerful motivator. And what's the thing you want to learn, mate?
Oh, what do I want to learn?
Yeah, what do you want to learn?
Oh, geez. I think I said one the other day. What did I say I need to fucking learn about this?
I remember this actually.
I want to learn the ins and outs of acquiring tenements so I can do it myself.
I know some guys at MMTS.
Yeah,
sort
but
you
then
out.
the whole deal side of things of how to get them off someone, just that whole world, how people get rich. That's what I want to do.
Is this for the money of mine? For your MD role? Or?
Could be.
It'll come handy.
Could be. I'll backdoor them in with a shitload of Zepos.
Yeah, I don't want to learn anything about that.
Good, you're sacked then.
What do I want to? I feel like I've learned a bit about the big North American companies. The majors and those dynamics, and mate, Quarter's the best for that. That's just a game changer. And things I'm keen to learn. I think like the weirdly the economics of investing in exploration. I'm kind of increasingly find myself really interested in the ways that we go about investing in exploration, because I do think there's I've got a belief that there's a way to do it, which actually makes sense. Like, how do you filter the right companies? How do you back the right teams that are actually aligned? And how do you kind of just maximize the probability of success in exploration? I'm just kind of, increasingly interested in that.
Oh, very good. That's a wrap, boys.
Good fun.
Well played.
Good sesh.
Good footy.
Good footy, guys.
Good footy all
Back to the pub where we are right now.
Yeah. Better bloody rip out the partners list, eh?
Thank you to Access Mining Technology.
Oh, God love them. Thanks to MMS, VRIFY, Greenland's Equipment, DSI Underground. Great for a bit. Great to get your pub going.
CRE Insurance.
Silverstone.
K-Drill.
SMEC.
And Spark.
How good is Spark? Hootaroo.
Go Australia.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.